Hello, I'm Juliette Sarli, and this week's IG Macro Intelligence, we take a look at the travel sector. Tourism is travelling back to pre-pandemic levels. International tourism reached 96% of pre-pandemic levels in the 7 months through July 2024, driven by strong demand in Europe and the reopening of APAC markets. According to the latest World Tourism Barometer from UN Tourism, around 790 million tourists travelled internationally in the first 7 months of the year, an 11% increase from last year and just 4% below 2019 levels. The results support UN Tourism's projection of a full recovery in international arrivals despite ongoing economic and geopolitical risks. World Economic Forum data show the Middle East has had the highest recovery rates in international tourist arrivals so far in 2024, with a 20% gain above its 2019 level. In Australia, the latest ABS data show we have not yet recovered to 2019 levels. There was an increase in short-term international trips to Australia in 2024, but it's still 16.5% below pre-COVID levels from 2019. Well, Corporate Travel Management, Web Travel Group and Flight Centre are all listed companies that have issued recent profit warnings. Corporate Travel Group indicated its full year 25 revenue and earnings growth would fall short of expectations due to macroeconomic challenges and the completion of non-recurring projects. The company is targeting 10% revenue growth and 23 to 27% EBITDA margin growth in North America, Asia and Australia and New Zealand for full year 25. However, it expects an 18% revenue decline and a 49% drop in EBITDA margins in Europe as non-recurring projects conclude, resulting in a year-on-year downturn in group earnings. Shares down around 30% year to date. Meanwhile, shares in Web Travel Group plunged after it warned margins in its European web beds business remain subdued. Henry Jennings from Marcus Today wrote in an article for AusBiz that the news shouldn't have come as a surprise to investors if it had been properly flagged by management. He wrote, "How did the directors not know the Olympics was going to affect margins? The Euros were months ago, gold medals were months ago. Why has it taken so long for management to fess up to the issues? Maybe they did at the AGM in August, but no one was listening." Flight Centre was the latest travel firm to raise the shareholder alarm. Shares plunged 20% after its first quarter 25 trading update missed expectations. Adam Dawes from Shaw & Partners is concerned there could be turbulence ahead.
But then I got on the phone today, spoke to a couple of Qantas clients with larger holdings in there, and I said, look, this is the read-through from Webjet, this is the read-through from Flight Centre. How about we start taking some money off the table on Qantas, because that potentially is that next domino to fall inside of that as well.
The airline is also facing a multi-million-dollar compensation bill after illegally terminating hundreds of employees during the COVID-19 pandemic. Well, ASX TradeWatch technical data show investors see very little opportunity in holding Web Travel Group shares at this time. The 5-day moving average is beneath both the 20 and 50-day moving averages. Despite this, the average broker recommendation on the stock is a buy, according to Refinitiv. The average target price on the stock is $6.41, a near 50% jump from current levels. UBS has a buy on the stock, with analysts noting Web is a leading global bed bank player and overly negative outcomes are currently being priced in by the market. Now, when it comes to Flight Centre, the average analyst recommendation is also a buy. June Bailu from Tribeca also labelled it a buy on AusBiz's The Call.
But I do think that should the consumer improve in into next year, they should see the sentiment improve, and particularly in the US, that travel side, corporate travel side of things, when US rates have already been cut and another 2 coming this year. So it should be quite reasonable to support this company.
So if you did not own Flight Centre, would you buy it today? Because it's a 16% drop. And it's
I will be buying it, but probably not full position. But it's I'll be buying it.
Okay. Yeah. So.
Meanwhile, RBC Capital Markets analyst Wei Weng Chen called the update from Flight Centre incomplete, suggesting it could be the next travel domino to fall. And Capital Markets is negative on Flight Centre with a price target of $22 per share. Now, despite potential further legal challenges, analysts have a buy on the Flying Kangaroo. Refinitiv data showing the average target price on Qantas is $7.83, suggesting a near 5% gain from current levels. Data show Qantas is experiencing a strong bullish trend supported by several indicators. And that is your IG Macro Intelligence for this week. We'll see you next week.